All right, recording in progress. What is up, everybody? Thank you for showing up today for our, it looks like bi-weekly so far, talking about doing it once a month, every other week, all those sort of things. We'll figure out, we're going to do we're going to open it up at least once a month to do these live webinars, and we're just going to get right into it. We'll let people come and go. You'll have access to this when it's done. So we promise we're going to start with, we're going to get into crypto. We're going to take a look at crypto. Crypto has been an incredible product for the last, I've been in it since 2014. So like 8 years for me, life-changing for me and my family and friends. It's a journey. Well, let's back it up a little further, and let me just give you, I'll start with who I am and all that. I'm sure most of you pretty much know who I am in my story, but I am Chris D. Macro. I am the proprietor, head trader, owner here at Pollinate Trading. We are a trading group. We're a trading outfit. We're not a brokerage. We're not anything other than that. We're traders. And whether that's short-term, long-term, whatever it is, we're here to make money from the markets. That's what we do at Pollinate. I've been trading since 1999. So that's about it is 23 years starting tomorrow. I think April 1st was my first day on the trading desk or in the trading office. So 23 years doing this game, whether it was full-time, part-time, whether I was in Iraq, or living in South America, or whatever I was doing, I was trading the entire time. And so my story is just a lot of history of that. We are I'll get into, I promised everybody the discount for Swing Beast. We'll get to that when we get through here. It's everything I do is systematic trading. Okay, occasionally I'll do some sort of like break it down and what I'm thinking and all that. And that's fine, but it's great for market regimes to understand where things are, but getting things to the point where people are able to, or our traders are able to have a predictable, repeatable model that they can statistically win over time is what trading is all about. And that's what we do at Pollinate Trading. So things like this, where we break it down, this will be systematic. There is systematic things that go through it, but you can stack on a lot of what's going on, because a lot of people really just want to know what's happening there more so than what what they think they want to think about what's happening. So you always have that need. Traders, when the market dipped, this little dip we had in Bitcoin an hour or so ago, the first thing that everybody says, what happened? They want to know why, right? Reality, it doesn't really matter. It doesn't matter too much why it happened. It happened, and you need to have a plan. If we said, well, Russia just sent rockets into Poland and took out a U.S. Observational post or something like that, a compound of some sort, would that change your decision? If it was not, would that change your position on Bitcoin? Probably not. You'd be like, oh crap. But I don't think you'd be like, oh, I need to sell all my Bitcoin because of that now. I think so knowing why and all those other things are interesting for sure, but really they don't move the needle. They don't actually have anything to do with your trading, especially if you have a systematic approach. Now, if your whole life is just buy and sell based on news and your feelings, then yeah, you might have sold. You might have sold when, China banned Bitcoin, I don't know, the last 30 or 40 times. You might have sold when they started talking about, green energy, Bitcoin mining and all that sort of, if you're just looking at, reactions to the news, and people are saying these news, if all that was there, you'd be out. But if you had a systematic approach, and when they first started talking about that green energy, or when China first banned it, I mean, I remember what was it, back in 2016, the end of 2016, I think that they banned it there, and pretty much it went from, if I recall, it went from like $500 or $600 to up to like what, $1,300 in like a week. It was crazy. Hearing those numbers, and that doesn't really, like, that sounds, whoa, you were like, people were trading. There are people, like, we've heard of people who actually owned Bitcoin sub 1,000. Yeah, there's plenty of people. So having a system is what keeps you in the, it kept me in, this whole, let's turn these off because they're going to really screw it up. There we go. Kept me in through this period, and still in Bitcoin and everything else. Now, I know you're here thinking to yourself, like, okay, well, why are we talking about Bitcoin? Bitcoin's trading at 46,000 right now. I've missed the opportunity on Bitcoin. Now I need to own a bunch of altcoins to get to really make my money. Chris, you got lucky. Maybe you guys got lucky with other names or whatever. It totally doesn't. The opportunity is not there, or is not lost on to be in Bitcoin. There's still super huge amounts of opportunity, and for the first time in about a year, people are like open to the fact of like, oh, I actually see where a government, the world reserve currency could be upseated by Bitcoin. That discussion is suddenly happening, and people are really open to it. 6 months ago, man, all you were hearing about was layer ones, layer twos, Web3, gaming, multiverse, all that, right? You're still hearing all about that stuff, and everybody's still still high on that stuff for sure. It's like fun. But now Bitcoin has re-entered the conversation, and people are kind of like, okay, yeah, I actually did think it was a Gen X coin, or it was like a bunch of those doomers. Is that what they're called? A bunch of doomers and libertarians who are just straight up crazy for Bitcoin and nothing else. Everything else is a shit coin. I don't care. Like, I'm not that. I'm a trader. I have a systematic approach. I don't really give a crap about any of all that sort. I'm not on the Bitcoin maxi, ETH maxi. I'm not an evangelist for any technology or proponent of any technology. I think they're all great. And I think evolution, we should continue to evolve in technology, right? In science and technology. We can't be stuck into, what was good in the 1950s, or what was good in 2012 is good now. Like, we have to continue. We get new information. We have to continue to grow, to update our perspective on life, on things that we're doing. We have to continue to improve. Continuous improvement is literally the way. If you're not improving, then you're pretty much deteriorating. The atrophy kicks in. So, all that being said, from my perspective here, so if you're a Bitcoin maxi, I apologize. If you're if all you're into is NFTs, I apologize. I'm not going to spend a lot of time on that. I'm just going to talk as a macro investor, as a systematic macro investor. What are we going to see here? What is it going to do over the next few years? How's it going to grow? What in the next few months? What are the cycles? How do we catch these cycles? How do we take advantage of the onboarding of 8 billion people onto a digital currency? Not 8 billion. There's only about 4 billion people on the internet right now, so still half the world doesn't have internet. As that other half comes online, they're going to be joining a world where the native currency is, they're actually, these are places in the world that they have just cell phones, not web or internet based cell phones. They just have SMS, and they share minutes. There's a whole currency of, like, you buy on your cell phone, like in the United States, we don't really think about this, but when I lived in Colombia, and Mexico, I would go to the little corner market, uh, and I would just go in and I would say, hey, I need 500 minutes for Tico. And so the carrier, and then the how much I wanted, and they would say, okay, what's your number, blah 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 blah, and then you would give them, not 500 minutes, like 500,000 pesos of or 1,000,000 pesos worth of minutes on my phone. And then if I, that, so I could use the phone and all that sort of stuff. But then if I like needed to pay my maid, or somebody who did some work for me, a lot of them would say, yeah, just pay me in minutes. I don't need pesos. And so I could, give them like 200 minutes to pay for that, the good and service. So that's like a native thing in a lot of places around the world. I spent time in Iraq. I spent time in Haiti. I spent time in Colombia, Mexico, Peru, Argentina, numerous places in the Middle East, lots of Europe, and in some places it's very common that that's the case. So imagine those people coming online to the internet and having a digital native currency that they can use. So we still have a lot of the world coming online, and we still have to onboard a lot of people. So things like Bitcoin and Ethereum are going to just naturally rise with that. Okay, enough of that. Like trying to be an interesting podcast interview answers. Let's just get to systematic stuff. So we've taken that out of the way. Already you can tell that I am very long-term, the next 20 years or so, 25 years or so, believer that this digital currency, cryptocurrencies, cryptography, AI, quantum computing, all of that, robotics, all of that will be a common thing that won't be just mind-blowing anymore. It'll be just common discussion. And there I was doing the podcast guest again thing. But let's get to Bitcoin. Let's take a look. If we're looking at what is the core asset of the crypto world, it's Bitcoin. Yes, the equity markets are very similar right now. The commodity markets tend to be a little bit similar, or in their own Bitcoin type bull market right now. There are a lot of correlations, but there's a correlation in assets that you cannot, that are not US dollar based, right? Anything that's higher than 7 or 8% inflation, more 14 or 15% inflation, is what people are chasing. Because if you're in something that's like if you have US dollars and inflation is going at 7.9%, most likely 15%, well, that dollar buys you less than it did a year ago. That dollar buys you, like 90 cents, 85 cents, 80 cents worth of value a year from now. And it just continues to compound like that. So you need to be in assets that are not US dollar denominated. Equities, stock market, commodities don't really, they have been it for sure. They definitely benefit as an investment in an inflationary environment. Housing, real estate, I guess is a better way to say it. And digital currencies, because now you actually have a world where it's very easy to go out and get, I can beat inflation with staking Luna, right? For 19 to 20%. Luna USD or whatever that stablecoin, Luna stablecoin is, I can go out and stake that for something like 19%. So in a little over 4 years, that's doubled my money, right? In US dollar, like I own a US dollar, so theoretically the safest asset in the world, and I'm beating inflation. If it's actually 7 or 8% inflation, then I'm doubling, nearly tripling that. If it is, what the shadow CPI stats are, have us at 14 or 15%, you're still beating it. So you're still beating inflation just by being in a stable coin that's backed by what? You're looking at it, backed by Bitcoin right here. And Do Kwon, the founder, the head HMFIC of Luna, is out acquiring billions of dollars worth of Bitcoin to back the Luna stablecoin. Okay, so you have that, all these narratives are there, and $125 million a day is how much he's buying, I think, something like that. Mr. Saylor again coming in and buying another 205 million. He literally spends his entire time thinking about new ways to get more Bitcoin. This is the asset on every corporate balance sheet that has crypto. If you're a public company, if you're going to have crypto, you're going to have Bitcoin. Now, I believe you should have Ethereum as well. And I believe that you could get into DeFi and, do things like, just think about how many people would want to have Luna's stablecoin at 19% interest. If you're a corporate treasurer, that sounds kind of interesting. But Bitcoin's the one. So when Bitcoin's moving, everything else is standing still or like plays along, but definitely underperforms. Okay, let's have a look at, where is it? Let's have a look at the last, let's look last week. Okay, so you've got in the last 7 days, 24, yeah. Okay, let's get it. Bitcoin. So we've got the Cardano, Kusama, Synthetics. This was a portfolio last week for Shitcoin Billionaire. This is the portfolio this week for Shitcoin Billionaire, 24%. Last week, the portfolio was up 12%. Big moves. And you compare it to Luna in that period of time, 11%, Ethereum 7%, Bitcoin 5%. But if we go back, when let's do 3 months. Right, that same portfolio that we're currently in right now, down 79% compared to Bitcoin, down 1.5%. It's recovered it. It got down to like 25, 30% in that period of time. But when Bitcoin starts coming back, everything else starts coming back with it, right? It all starts doing its thing. And so when Bitcoin's feeling good, everybody feels good. If we were to just take a look at, this is the shitcoin universe right now. Aave, Wave, Gnosis, Synthetics, Solana, Compound, Filecoin, Balancer, Siacoin, Kusama, Curve. They're all like, all the shit coins are starting to move. And why are they starting to move? Because this is a weekly chart of Bitcoin. Because Bitcoin is taking a breather. And the way it works is when Bitcoin starts moving, everything underperforms. Okay, so everybody's piling into Bitcoin. The amount of people who are the wallets, we know now that the last time, there's only been 2 times in history, and this is the current time, where the number of wallets on exchanges are this low. The last time it was this low was back here, November of 2020, when it was trading at around 12,000, and it went from 12,000 to 42,000 in the course of about slightly over a month, from November to basically the end of December. You go from 12,000 to 42,000, almost. So that's like a 3 to 4x in 2 months. When you're concerned about when Bitcoin starts moving, if you've been in this game long enough, you're very worried that, oh crap, maybe Pomp is right, maybe Michael Saylor's right, and everybody piles into Bitcoin. And the people with the most amount of money that have been in this game the longest are, if when they have their wallets on exchanges, that means that you move your wallet onto an exchange to sell out of your Bitcoin, okay, or to acquire more. But but you only have your wallet on you only join an exchange, I should say, if you are ready to liquidate. So you'll see big turning points here where, wallets come back online and Bitcoin jumps on exchanges. When you see those massive peaks of Bitcoin on exchanges, that's whales dumping. And that's where you get this. But at the bottom, when you see, and the last time we saw it was over here, $12,000, $10,000 to $12,000 Bitcoin is when we saw it last happen. It went from in about a month and a half to 2 months from 12,000 to 42,000. And so that's one of the most bullish things out there in the market, is that we have whales or the least amount of Bitcoin on exchanges right now, the last time that was here. Okay. And now we have a buyer of billions of dollars of Bitcoin. All those things are just big picture. What's going on? Why is this a lopsided market? And we're up from we held that 30, this trend line here. We held up, and we're up about $16,000, $14,000 in the course of a month or two. Everything feels good, right? So let's say you sold out. Let's say you were short selling. Let's say you were doing all that. You're out, and now Bitcoin starts moving. You hear things like, oh, this November thing, you got to chase it. You got to rush in as fast as you can to buy more if you don't already have some. And so you create this incentive where, all the short sellers and bears are here. They're all, highly levered on the exchanges. We can see where they got liquidated. That's not new information anymore. We can see where the leverage is extremely high. When you have leverage short really high, then you instantly have, and you have a supply, limited amount of supply and a huge amount of demand, it's going to move the price. And it moved the price really aggressively. And, you've got a steady buyer. Luna, they're buying it. We know that. So now there's limited supply because all those wallets are not on the exchange. So where are they getting that Bitcoin from? They just have to keep paying higher prices. And eventually people are like, okay, cool. Yeah, we'll sell you those higher prices. And then, the other thing that happened is, so that brings us there. Let's stop. This is our first, and I'm going to move it into momentum right now. The discussion on momentum and step away from podcast tidbits, right? And YouTube tidbits. And let's just get into one of the greatest anomalies for the market, and it's called momentum. And there's a professor of finance or economics at the University of Chicago, Eugene Fama, and he created this thing called the efficient market hypothesis. The efficient market hypothesis is that all the news is totally devoured and accepted and reflected in the price of the underlying. So everything is already known right now about Bitcoin, is what this is. Move this back over here. Everything is already known about Bitcoin. Everything you need to know about Bitcoin is right here. When a new piece of news comes out and it shoots up another 1 or 2%, then it's efficiently, the market is efficient. It efficiently processes that information and adjusts the price accordingly. That's the efficient market hypothesis. And so, you look at the Apple, you look at any stock, anything in the market, the fact that Bitcoin's sitting at $46,409.45 on Bitstamp's exchange right this very second means that literally every single person who wants Bitcoin has settled on, everybody in the world who's selling and buying has settled on the fact that this is the price that they want, they will have or buy or sell Bitcoin for. Okay. And then you get news and it'll change it, a little bit. And mostly what happens is, let's say you'll be sitting here, watching a stock or a crypto or something like that. news, you all of a sudden you see a tweet or you see something and it says, China bans Bitcoin, Solana, or Uniswap V3 is coming out. Ethereum, V2, ETH2 will be live by the end of May instead of, like something else. So boom, instantly that like changes the price. You see that and you're like, oh, take a look at ETH. You go look at ETH real quick on the chart and you're like, oh, ETH's up 8% already today. Yeah, I can see where that was like, it's already priced into the market, right? You see the news, you saw the news slower than somebody else who saw the news, and you just didn't react as fast as what that is saying. And that's the efficient market hypothesis. The only thing is when we go over here and we see this, this sort of move from, the COVID lows of 3,500 to 42,000. But really the momentum kicked off over here once it broke this 12,000 area. So this didn't mean that there was 24 hours a day, 7 days a week for 2 months, new news coming out that hadn't been reflected in the market, right? This was moving on what's called momentum. So it was moving higher, and because it was moving higher, people were feeding on that information. And so they're buying and they're buying and they're buying and they're buying. And then as it keeps going, people keep buying. And one of the reasons is momentum travels further and lasts longer than most people can understand or think. Like a lot of people who are sitting here talking about 125,000 Bitcoin, $1 million Bitcoin, like they say it because they're trying to convince themselves of that. So they're speaking it into reality, right? When we were talking about, are we ever going to see 20,000 Bitcoin ever again from 2017 into 2020? For like 3 years, everybody was saying, I think that's the top. I don't think we're ever going to. I think that Bitcoin's literally done. I think 20,000 was the peak, and it's never coming back down. Except it made it to 42,000, and it made it to 69,000, right? So the moves happen much bigger and much further, and they last longer than people can actually comprehend and think. And that's what we have. This is momentum right here, okay? And so when momentum gets going, it took a break at 42, came back, and then shot up to 65,000. So if you were a seller at 20,000, you thought this was the top. You're like, okay, good. And so what happens is you get people who are trying to be more intelligent than the asset, thinking that they sell, they short, they go against the momentum, thinking that, oh, okay, this is too far, I'm going to sell. Like everybody was a seller over here. And then when you got to that 20,000, there's so many sellers at 20,000, you can see it died out here. And then what happened? Rip. And then you get to 30,000 and it rips through 30, bangs around at 42, and then rips to 65, comes back down to test this area here, the 30 area, does it again and puts in a new high, and we're back down, and we're back down to test. But what we did do is we kept within the sideways channel. Now, this little pattern here, this is a very common momentum pattern. It's not witchcraft. I can pull it up on a 2-minute S&P 500 chart. I can pull it up on an Apple yearly chart. I can pull it up on gold, on crude, on any time frame. You will find a similar type of pattern, and it's momentum based. So within this, there's these things called fractals. So the breakout, right? Breakout within this area is this. So it's just, this is on a weekly basis. So it looks massive. But if we were to go back and put it on like an hourly basis from the middle of November to the middle of December, if I was to just put that on like an hourly chart, you would see this move, a pullback, a sideways move, another breakout, and then a peak down, another higher peak, and potentially a lower low dip, Doesn't always have to be symmetrical. And then it does this sideways thing. Now you guys have probably heard the saying, the longer the base, the higher in space. I don't know if you've heard it or not, but basically means the more it can maneuver sideways, the better the move is going to be. I've drilled these lines out here. I mean, who knows where that goes? But so far, I drew this back in January. I started drawing this. And this is a very common price pattern. Okay, so this is a systematic approach. It's repeatable. You identify and pattern match, right? When you see patterns that happen over time and they happen, often, that's good for pattern matching. And when I see these patterns, like I can pull up this. This is a 2-minute chart on the Russell, by the way. Let me just take all the training wheels off this thing and I'll show you what I mean. Okay, so here was the Russell 2000 a day or two ago. It had, notice how you had that run up and then you had that big sideways action that kind of did it. And once it resolved itself, it did it again. So it broke out of this high. See that pullback I was talking about? Remember how I said it did this little consolidation that I could break it down on a shorter time frame, and you'll see it. This is a 2-minute chart. Let me show you on the Bitcoin chart. We're looking at, this is the equivalent right here, the equivalent right there. The first breakout of that big sideways consolidation, the first breakout, and then you get that. So let me go back to the Russell to show you. And this is a 2-minute chart. So big breakout, came back to retest it. Boom, super high probability trade right here. Another one, boom. And this is the end of the day. So whatever. Another sideways and then sprint to the end. Then you spend all this time up here banging around, right? And that's overnight. So it changes. And then yesterday, it comes down, and where does it go? It goes down and touches, and I'll show you using Fibonacci. Where did it stop on a dime? 61.8% retracement. For those of you that are familiar with Fibonacci, that basically is what happened. And where are we at right now? We're right in there. So big break, volatility up high, broke it down, but came back to test this area again. Okay, so it's holding it. I mean, you can see it over and over and over in momentum. It works on the downside as well. You can see these patterns show up all the time, everywhere in markets. And momentum it leaves a trail, a breadcrumb. It leaves footprints. So what did we do? Right? It came down, held to 50%, but it got down towards the 61.8. Another move up. And so now let's, a new spot. So we're just using the lows there. Where did it come down to? Again, back into that, it pulls back in. And so now you're consolidating. We'll see what Russell does today, for example. But if Russell can figure it out, you look at the end of the day and you'll have an analog for what might happen on a weekly basis with Bitcoin. Or maybe not today, maybe over the next week or so, who knows? But the thing is these momentum patterns show up everywhere. And here we are. Now, when Bitcoin brings billions and billions of dollars of market cap to people, when you're looking at your Coinbase account or, whatever, every single day, like refreshing every single day, every few minutes over here, you're thinking of new ways to like, oh, how can I make more money? Making $500 a day is awesome because I'm doing nothing. I'm just smart enough to own this, that, or the other. And then Bitcoin stops. It runs up and then it stops. You're like, oh, okay. Well, it said 28,296 yesterday. Now it's saying 27,385. So I'm like down $900. That's whereas last week I was at 22,000. You know, you're like getting that rush. You're constantly doing it. And so what happens? You hear what's going on in the world. You hear about a new altcoin. You hear about another ecosystem, a new layer one, a new layer two, a new decentralized app, another metaverse. They're talking about the metaverse. You got to own real estate in the metaverse or a new NFT. And so you're like, okay, yeah, there's people, I can go and make that $500 or $1,000 a day elsewhere. So I'm just going to pop out of Bitcoin. I'm going to pop out of Bitcoin and I'm going to go get in the big names, like what else can I buy on my Coinbase app? Right. Depending on where you are in the world. I'm just saying Coinbase because it's the biggest pretty much. If you're on Binance, you've got a huge universe to look at, KuCoin, Coinbase, Gemini, whatever it is, you're on it and you're just scrolling through and you're like, okay, let me have a look at what's happening today. And you eventually you sort it. Let's do this. Eventually you sort it by percent change. And it didn't work. Okay, so Bake USD, FKX USD, IOST USD, CRPT USD, VeChain. There's finally a name that somebody knows. We've got Litecoin, Aave, Ripple, Phantom, Galaxy, EOS, Waves, all these names. Suddenly you're like, okay, I know these projects. And so you roll over to, what's cooking. That's a 3X one. So what's cooking today? Phantom's up 5.2%. Let's take a look at VeChain. Yesterday was up 17%, up almost 100% in about a week, right? So you're like, okay, I'm going to start getting into these. And by the time you see what's hot today, right? By the time you're in what's hot today, it's all, you're like, oh, cool. I'm going to buy VeChain. It's up almost 100%. It's going to go. And so you buy it. And then what happens? It pulls back. So there's a constant chase. You're constantly getting it. When you're hearing Doge is running, you're like, if you've been in the game for a while, you're like the least willing to get into Doge. When last week, Ethereum Cash doubled, right, in 1 week's time. One of the reasons that Ethereum Cash does this is because it's a name that it's one of the king shitcoins, right? It's one of the whole reason that there is a market named shitcoin. Doge, Litecoin, Bitcoin Cash, especially. So we have all these biases, right? We have all these things that keep us out of getting into what's actually moving. And there's actually a very awesome, simple way to go about it. Now, if I gave you one example, which is buying Ethereum right here, you're like, no, or Ethereum Classic, I should say. Right here, you're like, oh, no. So the way we do it is we go get our entire universe of alts, and we look at, okay, which ones are the best performing in the last 7 days. Okay, so if I go back, it's got to go back to I don't think it's going to be able to go back that far. 29, so we got to do a 5-day. So we should be at 24. Yeah. So if you were to just go pick the top 10 names right now, evenly distributed, and we're talking about Shitcoin Billionaire, this is the strategy right now that we do. You would go out and you would buy Wave, you would buy Comp, you'd buy Gnosis, you buy Aave, you buy Synthetics, you buy Filecoin, you buy Solana, you buy Siacoin, you'd buy Balancer and Kava. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. That was 10. And you would just take whatever percentage that you have. So for me, it's 1% of my crypto holdings is in the Shitcoin Billionaire strategy. Ideally, what will happen is it'll turn into 10% of my account, maybe even 20% of my account, because we're talking about things that go from, you know, 1 penny to $100 in the course of a few weeks, right? Or a few months. We've all seen it. And every week we just pick the day of the week that we do it, and we do it. And we don't even care that Wave is up 90% in that period of time. We just rotate in and just stay in them. We don't care, because sometimes you actually end up in Wave when it was up 21%, and it ends up being up 100% by the time you're getting out. Sometimes you're in Wave up here and you're just in Wave up here, and it makes a little bit, right? But the guy at the bottom of the list, Kava, Balancer, Shitcoin, Solana, especially this week, are ripping to help you out with that. And that's where the strategy works. Now, it only works in alt season, and alt season is simply when your basket of alts that you're looking at is outperforming Bitcoin. So 5 days. And we can definitely see that our basket is outperforming. Our basket last week is underperforming now. So that's why it's important to rotate in and out every week, because look at this is this week's portfolio, which I got in on the 29th over here. So it's still you know, down a little bit for sure. Let me see where I'm at. I'm up on the week. So last week I was up 12%, which I think Bitcoin and Ethereum were up more than that. So that's why I say 1% of my portfolio is something that I do. I don't do large percentages of my portfolio in it. The biggest amount of money is in Bitcoin and Ethereum for me, not in the alts. And so last week, the portfolio that now is underperforming was up 12%. Okay, not a huge amount of money really, but when you compound that for 6 months straight, or, you know, for however long it runs, you take $1,000 to something like $12,000 over the course of a period of time, because you're just rotating in. You're not chasing what has already broken out. You're not chasing what you think is going to be next. You're just positioned on, okay, where is the strength? Where is the momentum? Right? Where is the momentum? And when the momentum's like you just want to be in that and go. And so right now, while Bitcoin is underperforming or is not ripping, people are bored, because some people just went from 35,000 to 48,000 on Bitcoin, and now it's pulling back, and they're like, okay, well, this thing called Wave is like, you know, doing everything. So let's go jump into Wave. And USD, is that right? Yeah. The waves are there. You know, so you go jump on Waves, right? And all of a sudden Waves is done. And then you're like, oh crap. Well, you know, maybe Doge is going to be the new one. So you just kind of like, because you remember what happened last year to Doge. And it's not. And then you go to SHIB. Slow down, Mr. Doge. And you're just like looking, or what is doing? What's it? And you're just constantly chasing. So what we do, again, everything that's just guessing, and that's hoping and praying. What we have is a systematic approach to get in when it's an ideal time to get in, and then holding it for 7 days and rotate into the next one, and rotate into the next class and the next class or the next cohort. It's very simple. It doesn't require too much effort. And again, it's 10 to 20% per week, not a huge amount of money. when, you could ape into $10,000 all in on, Hex coin when it was whatever. When they were at, when they came out or something like that, you always see the advertisements. If you put in $105 when Hex was at its low, you'd be a millionaire right now, or stuff, stupid stuff like that. Really, really, really scammy marketing. So you get caught up in that. You're like, oh, I got to own Hex, and then I can go stake it for 40%. Like I can't lose, except, that's your 40%. That's where your 40% went, right? You put $10,000 in there. It's now $1,000, but you're making 40% on $1,000, right? Which is the lie that they tell you. So instead of that, we just rotate into the top performers. We sit in it, and occasionally we have the one that goes. Occasionally we're in, like right now, we're in Solana. Okay, Solana. What did I get filled at? Price was wrong one. So I'm in this. Actually, I'm in the triple X. Yeah. So I got in on this one at 15 cents. So like right over this area, 15.00. So yeah, 15.00, like here, right? So that's up 25, 30 something percent, right? In 2 days, 2 or 3 days, it's ripped. I was in, or I'm still in, Aave, Luna, Near, Atom, Matic, ETH, Bitcoin, all of them. And they're right at entry. The only thing that's actually moved really is Solana. So, and I sit on this for a week, and then I rotate into what's next. And then I rotate into what's next. Occasionally I'll catch the, we did, last week was Cardano. So I got in at, we got in at 106. So like here, and then I got out at like 120. So like 14 cents on, isn't huge, but you catch some good winners. My biggest winner was Synthetics, actually. And look at that. Synthetics, we could have stayed in Synthetics into the next one. And that had a pretty good move yesterday and today. So like there's all these really good opportunities that just show up. And instead of constantly trying to chase what is moving, like looking at the list and getting what's moving, we're just jumping in what's already moving, and we're not getting into one because we think it's better than the other. I know if you've been in this game long enough, you've definitely had the opportunity when you were like, oh man, I can't buy Ethereum Classic. I can't buy Bitcoin Cash. I can't buy Cardano. I can't buy Solana. Those are all shitcoin, blah, 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 blah. And then, Solana does what Solana did. Cardano did what Cardano did. Ethereum Classic did what Ethereum Classic. So we don't care what the dev teams are doing. We don't care what the white papers say. We don't care what their roadmap looks like. We don't care what their Discord community is like. That's what everybody is playing. That's the game everybody's playing. And, it's a tremendous amount of research and a tremendous amount of work to do that game. But at the end of the day, if you're just in the things that are moving, you're playing the momentum. When you catch a momentum, you can stay in the momentum and you can really take advantage of it. So instead of being, having to pretend that you read the white paper or pretend that you understood the white paper and that you spent, your last week in some, 18 different Discord channels, and all those things, all you have to do is just kind of like, okay, cool. Let's just be in this stuff. Let's just be in this stuff. And here we are. Now, the other thing that's you'll notice, and we should have seen this, when Bitcoin caught the flu or had a sneeze, as they say, when Bitcoin sneezes, everything catches the flu. So even Waves sold off, or Waves, everything sold off. Waves is up 11%, Solana's up 4%, AVAX is up almost 2%, gold, synthetics, algo, rand. That's all that's up right now today, because Bitcoin is dumping and everything goes with it. So when that starts happening, you're scared. And right now, everybody is super scared because we've had 2 rug pulls here, and it's just easier to be bearish when your recency bias is bearish. And most middle skill traders are super bearish right now. They're looking to take shorts. They've taken shorts. And maybe they've won, and that's fine, but the thing about it is it just takes one little thing. And when you're in the proper momentum, when you're in the proper environment, the proper market regime, you don't think that you're actually going against what reality is. You think that, oh, I'm smart because I knew exactly when everybody else was too bullish, and I just stepped in and shorted. And it's just the environment isn't conducive to that sort of thing. But the cool thing is, we see funding rates. We can go look at our funding rates right now. Let's have a look at Bitcoin funding rates. And basically, everybody is levered. Everybody is levered long. So what's going to happen? It's going to go down. You just see all exchanges levered long for the last 8 hours. Everybody's long levered. Looks like, yeah. So BitMEX, Binance, Bybit, OKX, Wobi, Gate, FTX, BitGet, Didex. All the perps are levered long at this moment on Bitcoin, and have been since pretty much the 26th, until about the 29th. So let's look. Let's go to a daily. So this is all systematic stuff. So here you go. 27, 28, and 29 is when we started to flip that. If we go back to our funding rate, see how it was a bunch of levered shorts over here. So from the 22nd to the, really on the 26th or the 27th is when it stopped. So 22nd to the 26th, then this is where the big liquidations happened. All this was just levered shorts getting squozen, just getting taken out. Okay. And now they're setting up, and everybody's like, oh, cool, Bitcoin's down 2%. Yeah, I told you, idiots, we have this shooting star at the top of a range. And that's the, the sell signal of the world. And people don't actually understand what the expected distribution of that profit would be. So they expected, if you look at if you do any research on a shooting star pattern at the top of a range, for it to be successful, that would have to be, for this pattern to actually be successful, price would have to be 44,076. My guess is it's going to, if it touches it and reverses so hard and so quickly that you'd have to be like, and at 2 a.m., you would have to be just like the fastest on the trigger. And oh, by the way, your platform can't go down, and you have to be awake at that point, all these other things. So even though we have a beautiful sell setup, what is more bullish, that's the first part of it. You have this great little sell setup. Okay, cool. But if you're in the wrong environment for that sell setup, if you're in the wrong market regime, it doesn't work out. I can go trade a 75% win rate, 80% win rate strategy in a bull quiet market regime, and try to apply it in a bear quiet or in a neutral or in a volatile regime. And it has negative win rates, like 0 for 3, 0 for 8. And the important part is the winner on this trade. This isn't a winning trade right now. This is a, like, I feel okay, but the winning rate on this for an actual winner, it has to hit 2R. So if you don't know that data, about the about this pattern, about that specific price pattern, about that market regime, and about this asset itself, if you don't know that, then you're think, oh man, I'm brilliant. I shorted this thing. And yeah, if it does hit 44, then that would be one data set, one winning trade out of, a universe of 1,000 or a database of 1,000 trades. And the thing about sell setups in a buy regime, in a long regime, is, and I always say this, the best looking sell setups in the world, when they fail, that's the market telling you that it's more bullish than you think it is, right? Then that's something interesting. So the first action is to short this. So middle skill traders, and by the way, I don't give middle skill traders are the poorest traders in the market. They are the worst traders. They lose the most amount of money. Every rally they see as a sell. Every dip they think is just the beginning of a sell-off. They're just constantly bearish. They're constantly thinking that they're thinking ahead, but it's that Dunning-Kruger effect, or that meme, the bell curve meme, where you have the low skill trader is like my father-in-law, who bought Shopify at like double digits and was like, oh, yay, it goes up, I don't know, $1,500 or something like that. And he never sells. Or when it hits $1,000, he's like, I'm going to take a little bit off the table. That's a low skill trader. And they make so much more money than middle skill traders make. Middle skill traders they're the ones who started out doing that. And they're like, you know what? Yeah, this is kind of expensive. I'm going to start day trading for a living, or I'm going to start doing this for a living. And they go through this horrible journey where nothing they do, it works out initially. You like start shorting and you're like, oh, cool. And you start reading Zero Hedge religiously. And, Norseman Trader is, old Sven is like, he's the gospel. And you're just like, everything is bad and dollar's going to default. You guys don't get it. That's a middle skill trader. And you see all these bearish things nonstop and you pile on. And the cool thing about it is middle skill traders account for the majority of traders in the market, not the amount of dollars, but the majority of traders. So that's why buying puts pay out less than buying calls. Because the market makers of options know that you have this big cohort of people who are always going to be buying puts, and they're going to be they're thinking that Bitcoin is going to 20,000 to 19,000 to 10,000, and so they see this, they go out and they buy puts on it, and it actually goes to 2R, which would be 44. And that's the trade, except the middle skill traders don't understand that that's actually what that trade this trade doesn't represent this going to 20,000. This trade, the only thing that this trade does is it says you have a potential to hit 44,000. It doesn't say anything about it. It will hit 44,000. That it's not the case. This isn't the best sell setup you've ever seen in your entire life showing up, and it's only happened once, and you're lucky enough to find it. So market makers of options, and I'm using crypto options, but this works in equities way more. So degen put buyers on the S&P, man, if it goes 2R on your trade to the downside, you'll make, let's say it's $1,000 you make at peak profit. Okay. If it goes 2R to the upside, you make $1,500 on the trade in profit, because they know that the average trader, the middle skill trader, the person who's constantly buying the fear and doing all that, they'll pay up for it. They'll pay whatever it's worth. They're like, oh, that's $500, per contract. Cool. Give me 10. Even though, it's 25% higher than the in value, just because it's a put. So the market is populated with the negative types that are always going to be doing. And what do you need to have a rally? You need everyone off the bus. Everyone off the bus. This shit sucks. So for the last few months, from January till March, I mean, we had a big rally back in February that everybody was super bullish on, and it got negated. Best looking sell setups in the world down here just got negated. And what happened? In 2 weeks, boom, boom, gone. Everybody's super bullish. And so over in here, everyone's off the bus is what they're saying. At 69,000, everybody's like, it's going to 125,000 because Plan B said it would by the end of the year. And we got a month, and oh man, I got to be in now because that's double from here, right? And what did it do? It just, everything. And these are troll tops. I call these troll tops. It trolls people in to thinking that it can't stop, but you don't get troll tops in a bottom formation. You get trolling bottoms for sure, where it feels like it's going lower and it doesn't. And you get a lower high and lower low and all that sort of stuff. And it does the opposite, because guys like me are going to run those stops on purpose because I want people off the bus. And that's what they're doing right here. This is the sort of thing that it's right in here. Everybody's buying this right now. Which one is that? I can't tell what color that is. Somebody's got the most. Is that 0180178 Didex? So the most amount of long leverage is on Didex right now. So that just means it's, that's where we're probably going to see the liquidations on Didex. And how big is that? It doesn't say in dollar amounts, does it? Yeah, it doesn't say it. So usually you want to see something like Binance or FTX to be like really big before it really flips. But so that's where we are. So with this going sideways, and if this right now it's fear, but if this stops and we go sideways, then our Shitcoin Billionaire strategy is set up and we're in our positions and we just roll with it. Okay. That was a long one covering all that, but that's where we're at with crypto. What I think is going to be happening, I think we're right at that area where we should get some consolidation in this area here. We hit let's take a look at what happened here. So if we look for the peak in November to the bottom in January, and we get our volume, you can see that the most amount of volume was, is up in here at this area. You can see, and it's obvious because once this broke, everybody was holding on to that 46,000 narrative. If it breaks 46, it's gone. Everybody kept saying, right? And it was true. It took off. And so there was a lot of dip buying over here. And what happens in that is if you bought over here, when you sit through 46,000 down to 34 or 32,000, by the time it gets back to 46,000, you're selling. You're done. Like, screw this Bitcoin thing. It's too volatile. I can't handle it. I want my money back. And the thing about it, the reason people do it is because mentally they don't want to be considered a loser. So it's hard for people to take a losing trade because they associate a losing trade with being wrong. And our society rewards remembering something and remembering it 70% or better, right? Rote memory. We're just conditioned for a 70% success. And so, you take a test, the goal is to get, for a lot of people, it's 100%. So if you're constantly taking tests for validation, then you're definitely going to have a tough time as a trader. And so that's the majority of people. They get in here. And the cool thing about it is they don't have to show, as a trader, you don't have to show your P&L to anybody else. You don't have to show your receipts. You just do it. I bought the dip, and then you just don't say anything for the next few months. And then you're on to a new subject at 46. Goes down, lose 25, 50% of your money, comes back up, and then it's back to 46. You sold, and you can say, yeah, no, I got out at 46, right? I didn't lose any money on that trade. Like, how many times have you bought something or shorted something and you just prayed and prayed, and you found religion, and you said, you know what, if this thing gets back to 46, I'm selling, and I'm not going to, trade ever again or anything like that. And that's what happens. That's what this is about right here. So we've built this new base, and now this is the last area. And you can see this is where all the selling came in, right? Where did the selling come in? All the selling came in right here. Pretty obvious that was going to happen. Totally expected that this is what we want, because we need everybody off the bus. If everybody's on the bus right now and it's easy, because you've heard it on Palm's podcast or whatever, you've heard everything, that it's super easy, when the only time other in history that this many wallets have been offline, it was November. But that happens here, right? Everything that happened from November to April, nobody remembers a lot of that FUD. A lot of that nobody remembers. Everybody just remembers, man, this thing just ripped. This is just one minor day. So let's get to, so what I'm thinking is we're going to consolidate a little bit here. What you want on a breakout is you want to keep people off. You want to keep people running into shitcoins. You want to get people out excited about other things, because when everybody's in, you can't go any further. There's nobody left to buy. So when it's done, when everybody's off, and then all of a sudden it starts moving, now everybody has to, your short sellers, the people who are in short right now, if the high gets taken out, they have to buy to cover. They get stopped out. That's who gets liquidated, right? They're loving life right now. They're feeling great right now. And again, 44 is totally doable. I'm not saying that 44 is the bottom either. I'm not saying that it's going to 44. I'm not saying that it's not going to, or that it's going to stop at 44. That's not what I do. I just play the edges and the statistics. Like, what do I have at my disposal statistically? This may go to 44, but statistically it's going higher. It's like when I count cards in blackjack, it's not that you know what the next card is. It's just, you need to know that it's time to bet bigger. That's the only thing card counting is knowing when to bet bigger and when to bet light. And so right now, this is a bet bigger that we're going higher than it is a bet bigger that we're going down due to the market regime shift. Cool. Hour and a half of straight Bitcoin and a little bit of shit coins. But last time we did this, we had a buy on Luna. Last time we did the live stream, there it is. Okay. And so it was 90, was it 93? I think it was 93. Whatever. That happened, huh? Let's just call it 97. So 97, we had a buy on Luna, and pretty much it just banged around there. And then earlier this week, we got into the 110s, and we're back down. It looks like what we're going to get is that backfill. So you get a breakout and you get a test. So this also broke out of the all-time high this time. 1, 2, this is a 3-drive pattern, and it's come back, and this is where it's finding its support. So ideally, in the next few days, we will be, this is wonderful price action. You break out to new highs, and then you consolidate, put in another new high, and then come back to test that. Now, if it fails, yeah, you're going lower. But if it doesn't fail, we have a higher probability of it not failing. We have a probability that that this is normal. This is like an air pocket. You can see these little areas here that there's a lot of trades that just got skipped. And so it comes back down, picks up those trades, and go. So Luna, still in Luna, still stoked about Luna as a trade, swing beast trade. Let's have a look at the last time we talked. We were just getting in this guy, and it is not really doing anything, not much of anything, didn't really happen. it didn't really do much. So it's, you know, it's okay. Hasn't really done anything. Now on Monday, we got into, I put a trade out there, a swing beast trade on Juniper. And there we go. So we got in at 36.65, a swing beast long at 36.65. It's trading at 37.97. Using swing beast strategy. That got in, let's see, what are those trading at? 7.075. Is that right? Yeah. Those are up 100%. The calls, the deep out of the money calls on my Juniper options are up 100% in, so Monday, I bought them on the close, right around the close, Tuesday, Wednesday, Thursday. So in 4 days, I have 100% on that trade in Juniper because of the type of options that I purchased and using the momentum techniques that we're talking about here. So this is a momentum trade. And how do you get in? Like the thing about it is people don't understand how to trade momentum. People are scared of momentum trades, right? They don't understand how the moment, actually, no, it was Friday was the signal. Monday was the entry at the open. So, okay. Or, you know, or yeah, it was at the open 6. Let's see what time I did that. Equity futures at 6:42 a.m. Pacific time. So 9:42 East Coast time. So 12 minutes after the open on Monday, we got into this. And at that time it had pulled back some. So we got it in 36.65. What I said, 36.35. Somewhere around there. It doesn't matter. We're a couple bucks in now. I'm already 100% up on these. So if this works out, you know, 1 out of 10 ends up giving you 1,000% return or 2,000% return, like Apple, like Pfizer did, like Northrop Grumman did. So I'll show you Northrop Grumman. We got in Northrop Grumman over here. Back in, I forget when it was. Oh, it would have been over here. Sorry. Yeah. Somewhere in here, 380. We got into Northrop Grumman. This was pre-Russia invading Ukraine. This was just a swing beast setup, early phase swing beast setup that flipped into a late phase swing beast. You go from early to late all in the same trade. So that was like a 2,000% winner on that one. And this happened. So it would have been in late January, early February, we got in when it was over here. And it felt dead. It just felt dead. And then I guess the invasion happened. So it rockets. And then here we are. You know, we got out at over here, like this day here, one of these 2 days. So in March. So like, so we get in, I think it was in February, and 30 days later, it's trading 2,000% higher. So you put $1,000 in there, that's $20,000 that trade made. Back to Juniper, you put $1,000 in, whenever it was, so like over here. Yeah. You put $1,000 in here, you're up 1,000. So you've already made $1,000. You doubled your money in 3 to 4 days. To be fair, I also did this one. We're coming up on a month. I got in over here, and it's about, right now with the options I use, it's a zero almost. It's like 5 cents or something now. So it lost almost 100% of its value. So doing, so like, let's just lay it out here so you can see the math. Okay. Trade. So NOC. So, and then there was an Apple. So you can see you make 2,000, 3,200, 4,800, 4,900, 4,800, 4,700. You know, it's like a 4,700% return, and a 1, 2. It's actually about if you use the underlying, it's about a 70% win rate. If you use the options, it's about a 50% win rate, because the options can, even though the stock moves, the options may not move with it. So that's what we're looking at. These are the sort of trades we were in. Now on Monday, we had 15, and last Sunday, I sent an email out. Monday, I sent an email out with a big list of swing beast stocks that we were looking to get into. And most of those have really just, you know, taken off. And they, you know, the trades last about a month. So it's not something that you're just doing on a daily basis. You know, this is 100%. This could end up being 1,000, 2,000, 4,000% trade if it runs for the next month before we get out. So that's the thing that I promised. If you showed up after I tried to give you as much value as I could for the last period, you know, this live stream, giving you much value as I could to just for showing up on crypto and understanding momentum. And you know, in my emails, I gave you a bunch of names that you could have bought on Monday if you wanted. The thing is, if you don't understand how to enter, when to enter, the position sizing, and when to exit, that's a list of names that's just whatever. Yay, Chris picked a bunch of names, right? If you don't understand fully the strategy, if you don't understand the market regimes, the techniques, the scanning of the sectors to break it down, what sectors are hot and which ones are goes and which ones are not, and then go to find the individual stocks within those sectors, you don't really understand how to take the trade. You don't understand how to earn on that strategy. And, you know, when you can take, look, you can take $1,000 options account and turn it into 10,000 or 20,000 just as quickly as you can take $1,000 account into zero. So I'm not saying that this is a foolproof strategy. What's important about it is you have to use position sizing. You have to understand risk management. You have to use, you have to know when to take profits, right? Just knowing what to get into is fun. But not knowing when to get out is the hardest part, right? If you don't know when to get out of your trade, then you're stuck in something. And let's say this thing goes to 50, you make, you know, 1,000, 2,000, 3,000% on this trade. And then the next day it drops $3 and you're now only up 100%, or, you know, you lose all your premium to zero because you didn't sell in time. You're like, oh crap. You know, sometimes it's harder to you know, you're up, you know, whatever, you know, you're up $1,000 and then you end up exiting at $300. You're like, oh man, had I just sold at 1,000, right? But if you understand the techniques and the methods of doing that, you can get access to it. So I told you, and I'll go over the, you can get the, use the discount code BEAST Q1. Okay. If you want to get access to the Swing Beast strategy, meaning you own the strategy. You don't have to guess what I'm going to say about how I'm going to choose the markets, or, you know, when I'm going to say or anything like that. You'll actually learn how to do it, how to run it yourself, when to buy and when to just step away. You know, when to be in energy. We were in energy before, you know, all this craziness with oil took off. We were in crude back at $73. So, you know, it's whatever it's trading at today. You know, is it 110, 120, 200, 102, down from 130, I think. So we got out of it at a really pretty decent level. It turned out being not the best levels, but we took a solid chunk out of crude and the energy names. And that's what, that's what it is. You want to be in the sectors, you want to be in the names that are actually doing it. So if you want Swing Beast, there's a 50% discount until the end of the month. So today, I guess today it's done. You can go buy Swing Beast, get 50% discount. It's yours. You don't have to guess what's going to happen in the markets anymore. It's all there. Also, I gave that discount also works on your systems mastery. I've kind of hidden that. I haven't been sharing that as much, but for showing up here, same code, Beast Q1. Tony, I'll answer your question here in a second. Same discount code, Beast Q1. You can get a half off on the Systems Mastery course. System Mastery teaches you how to build systems so that you have a predictable, repeatable model that will tell you when to take entries, what to get into, when to buy, when to take profits, how big a position size, a completely systematic approach to trading. This is the best course I've ever done. We have hundreds of professional traders, and I'm like fund managers, traders on funds, family offices, wealthy, high net worth individual traders, prop traders, and just regular people have done that course. And that's, it's definitely not a flashy, fancy course. It's actually, you want to learn how to trade and do this for a living. How much money you need to make? You need to make $5,000 a month. You build a plan, and that's the way to do it. That whole course, you build the entire plan, and you can back test whatever idea you want once you do that course. So that's also a 50% discount. That's my gift for on top of hopefully some knowledge here. All that is at your disposal. Go over there to the website, pollinatetrading.com. Find those. We'll follow up with an email here shortly with those links and today's recording, and you can do it. And then finally, actually, Tony asks, what's my take on investing blockchain on top of Bitcoin and Ethereum, say blockchain portfolio, or you favor more on the momentum trading on the shitcoins approach? It really depends on your approach. So I have multiple, I don't have just one method to do things. So I have a revenue generating business, which is my day trading. I have a swing trading business, which is my prop trading in currencies. And then I have a crypto allocation, and that's risk on, risk off. It's either always, right now, it's just always in Bitcoin, Ethereum, because I got in so low, it doesn't really matter. And then when shitcoin season starts, I trade shitcoins. And then finally, I have, like I call my venture long-term future investing. And I'm investing in, AI type products. I'm investing in blockchain for sure. I'm investing in quantum computing. I'm investing in robotics. Think of kind of like, ARK's type approach, except I'm not buying it when ARK is buying. I'm more strategic in when I'm getting in, and I'm not just a buyer at any cost. And then once I'm in, I'm just in. I don't really ever plan selling. So those are my thoughts, Tony. And then finally, I wanted to go over SPY because I started my first long campaign again on SPY. We got in over here. So $20 cheaper. So we got in about 436. And honestly, even though I wanted it to start heading in my direction, and I've been looking for an opportunity to add to my position. And I haven't really had an opportunity to add to my position yet. And so potentially this week, we can get that. Now, what I like to see, I saw the break. So that was good. That's bullish. And what I want to see is weakness come in and churn around for a week or two. If we can get a good churn for a week or two, I'll probably be looking to add to my position. I'm going to be holding on to this probably into September or October, August, September, October, November timeframe, somewhere around there, about a 6-month position. It's already up The calls are already up 7% gain, 70%, 68.7% on these. I expect to buy like 5 to 10 more times on this one. So I'll be adding to SPY all the way through. Probably get an attempt up to the, is that going to help at all? No. Probably getting a move up near the all-time highs of this 480 area. Whether we get all-time highs or not is irrelevant. I'm just looking to be, I'm waiting for the momentum to kick off. And then I'm just looking to, now a lot of people are finally buying everything. It's going to bang around and it'll get quiet again. And that'll give me an opportunity to get some cheaper calls to add to my position and just keep adding to it over time. So that's what I'm doing. This was a swing beast scenario over here. So you don't just have to, run swing beast on individual names. That's where the most money is made, on individual names. But you can always do it in the indexes too. So do you guys have any more questions? Okay, seems no questions. Love you guys for showing up. We'll get this shared out to everybody. And we'll put it in the email. We'll be sure to give you that discount, those discount links for the courses. And, I'm glad you guys showed up. I had a good time. Thanks, Paul. I look forward to seeing you guys online and what we can do together. You got it, Keen. Thanks for showing up, buddy. All right, so I'll catch you all later. Wonderful time. I love you all for showing up. Bye.